some do and don'ts for raising funds?
VCs essentially are looking for three things, right? They're looking for smart-ass founders building a kick-ass product for a big-ass market. The one thing that they would not compromise on is the big-ass market, because everything else is replaceable. The market size should be worth for a VC to make an exit. What entrepreneurs miss out on is to understand that not every business is meant to raise money. Not every business has the same architecture. Like the venture data in itself is not a fundable business per se, unless we really, get on the tech of it. And which is fine, which doesn't make you any less of an entrepreneur or any less of a business owner. But when you're reaching out to a VC, what you really need to ask yourself is, will that guy get an exit out of this business? Which means that will I be able to reach that scale and growth where the second investor is going to come in so that the first investor makes money on the money he's investing? Because the VCs are in the business of making money, right? And you have to honor that. I think that is the first place where a lot of entrepreneurs get very rejected, because they have a good idea and they think that to arrive as a successful entrepreneur, you have to raise money. That's completely untrue. That's just media being biased about, some set of companies. It takes a lot of grit for companies to build the kind of companies they can, even bootstrapping their way to growth. But if you're in a high scale business, if the market size is big enough, you need to have some very serious differentiators, moats, USPs that make you stand out from the other guys in the market. I think that having a defensible product that is scalable is the most important thing to investors once you convince them of the market, right? And the third thing and the most thing is, it's been said over and over again, but I couldn't emphasize it enough, is the ability of the founder to be impressive enough. So you really have to make friends in the industry. It's about getting them to like you. It's winning their friendship, earning their respect. Nobody just puts money on a business plan. They really, really have to like the entrepreneur. So be a little more amicable. Be yourself when you're in front of a VC, and pitch your passion more than the idea or more than the project, because that is going to pivot. And VCs are okay with that. What they want to see is that you will be the guy or the girl who will take that thing through. And those are some of the do's in while
so
pitching.
Execution
Execution is key. Yes.